Okay, Info Edge is the next management on the show to discuss hiring trends in 2025 at a macro level and about the company itself. We're joined by Hitesh Oberoi, Managing Director and CEO at Info Edge. Good morning, Hitesh. Thank you very much indeed for joining us. And first up, on behalf of all my co-anchors and everyone at CNBC, a very happy 2025 to you.
To you and all your viewers as well. Very happy New Year.
Thanks, Hitesh. Okay, the first question really is that we're getting news that there has been good campus placements. There was a newspaper article saying that several of the engineering companies, BITS Pilanis, the Vellore Institute, all of them have seen a substantial increase in the top line offerings. Give us an idea about how placements have been. What's the Naukri Job Index telling you?
After a poor 5 or 6 quarters, IT hiring is now looking up once again. Our index is also reflecting that. GCCs are hiring in big numbers. Startups are looking to hire once again. AI professionals are in great demand. So data scientists, data engineers, machine learning engineers, their sort of demand is moving up. Attrition rates are going up in companies, and increments are also likely to be higher than last year. So after a dull 5 or 6 quarters for IT hiring, things are slowly getting back on track. It's not back to the days after COVID when, demand was on a tear, but it's getting back to normal once again.
In CNBC-TV18, we have forgotten the spelling of increment, but that's a separate matter. Can you tell us the salary curve? I mean, when you say that AI professionals, IT hiring, is it the 4 lakh category where you're seeing a good hiring? Or is it just these small peaks of extraordinary AI professionals? Give us an idea of volume and value.
Yeah. No, you're right. I mean, right now, demand is looking up for high quality professionals, or what we call premium professionals, or engineers from good institutions. Their salary bands are, of course, much higher than what regular IT services companies in India pay. So, the traditional large IT services companies, their starting salaries are more in the 4 to 5 lakh range. But premium talent in India gets paid more than 8 to 10 lakhs per annum as starting salary. And these people are currently more in demand, but that's how it starts. So, first the demand for premium talent picks up, and then it spreads to, other talent. The good news is that demand is picking up, and GCCs are hiring in large numbers. Even the big tech companies in India have started hiring once again. Specialized IT services companies are hiring in large numbers. So maybe not the big ones as yet, but the mid-sized ones are beginning to hire. And, attrition rates are slowly moving up. So this is how it starts, and hopefully it'll sort of spread to all companies and all kinds of professionals over time.
We should pull up one chart which shows the Naukri revenues over the last 3.5 years. And you can see the boom that we had post-COVID. In FY22, Naukri revenues were up 45%. In FY23, it was up 48%. Though that was the year of the Great Resignation, everyone was hiring in big numbers. And then, as Hitesh said, things slowed down for 5 to 6 quarters. FY24 revenues were just 7.5%. And even in the first half of the year, Naukri revenues are up 7%. But the green shoots are visible in billing growth, which is a precursor to revenue. So Hitesh, tell us, in Q2, we saw double-digit billing growth. Has that continued in Q3? And even for revenues, do you think we can get back to at least a 15% kind of revenue growth rate for Naukri in FY26?
The Q3 numbers are not out as yet, but you're absolutely right. Things started looking up in Q2. So billing growth was back in the teens in Q2. See, the non-IT part of the business, which is about half our business, continues to do well. So that part of the business was actually growing in the mid-teens already. It's just that IT companies were not hiring, and therefore growth in IT hiring or IT revenue growth was flattish to negative, actually, for a few quarters in between. So as a result, we were ending up in the 7 to 8% range as a company as a whole. But now IT hiring is back to growing in double digits or close to double digits, and the non-IT hiring piece is still sort of doing okay. So yes, we should target growth in the teens going forward.
This would be second half of the year, or we're talking about FY26 getting back to mid-teens growth?
No, we would. No, last quarter was good for us. So last quarter billing growth was in the teens, and hopefully it'll get better from here on. if things go well. I mean, what I'm actually more worried about right now is not so much IT hiring, but non-IT hiring, because that's more indexed to the domestic economy. So I hope that continues to grow.
But are there
like it
any
was
signs
growing
of
earlier.
sluggishness in the non-IT hiring, which is
Has it gotten worse?
No, it's still okay. I mean, of course, there are differences across sectors, but on the whole, it's okay. I mean, certain sectors are of course doing better than others.
Okay, give us an idea in terms of bottom of the pyramid. Say that, like I asked you, 3 lakh, 4 lakh hiring. If you looked at BFSI, IT, all of them put together, are entrant hiring better, say, in the last quarter than it was same quarter last year?
Yes, no, certainly things are beginning to look up for entry-level hiring across all levels.
Okay.
And, so my sense is it's only a matter of time before things get back on track. Of course, the economy has to continue to do well. But what had also happened is that all these IT companies had overhired and they had built up a big bench, and the utilization rates had fallen to 73-74% levels. Because they did not hire for a long time, they did not replace the people who were leaving, they deferred joining dates of new hires. Their utilization rates are back to pre-COVID levels. Their utilization rates are back to 84, 85, 86% levels. Now, at least, even if they have to stay at the same number, at the same headcount, they have to replace the people who are leaving. So replacement hiring has started, even in the big IT services companies. Okay. So that will create demand. And then what will also start to happen is that a lot of people will start moving to GCCs, and some of these hires will be from IT services companies.
Got it.
And then that will sort of, the attrition cycle will start as a result. So I think if like I said, this is how it starts. So it's the big companies and the companies that are doing well and the GCCs who start hiring first. And then it spreads to other sectors.
Okay. Got that. No, we got that about IT. I got that about IT and GCC. Hitesh, what about, as you said, the domestic-facing sector like BFSI? Is there at least a secular upward? Is the delta higher? Because, there's this big fear that AI is probably, making them use their current talent in terms of different jobs because some jobs are getting done by chatbots. Is there a secular movement of more hire in the domestic-facing sectors, and also your investments in AI?
Yes.
Is that going to give you better margins or higher costs in the first place?
Let me answer your first question first. What we are seeing is higher demand in actually tier 2 cities and tier 3 cities. So some of the smaller towns are doing a lot better than they were earlier. And they're mostly hire non-IT professionals. So as companies grow, as companies spread, demand for talent is picking up in places like Jaipur, Udaipur, the small towns in the south, and so on. So that should drive sort of demand or for jobs at the entry level or the 3 to 5, 6 lakh category. So I think that should sustain. The economy has to continue to do well. See, that is more important. The economy has to continue to do. We should continue to grow at least 6% per annum. Because in the past, we've always seen that whenever India starts growing at 6-7% per annum, we run out of talent actually very quickly, right? Of course, we may be a little more productive than earlier. AI will have an impact. But in general, whenever India starts growing at 6-7% per annum, and if this sustains for 2 or 3 years, we run out of talent. Up till now, what was happening was there was an overhang post-COVID because most people didn't get employed during COVID. For a while, there was no hiring, and that workforce was getting absorbed. But increasingly, if India continues to grow at this rate, people will be hard to get. There is an employability issue. There is a skill issue in India as we speak. As far as our AI investments go, we are very bullish on AI. We have ramped up our AI hiring. Our AI team has grown from 15 people to 100 people over the last 2-3 years. This is the only area where we were actually hiring aggressively, even when our business was slow. And we are seeing great results as well. So we are, using AI to become more productive ourselves. We are using AI to launch new features to make our existing algorithms better. And we will soon be working on building new products using AI, which will create new revenue pools for us in the future. So we are, I think AI, and especially generative AI, traditional AI has been around for a while, but generative AI will go mainstream this year, in 2025.
So Hitesh, give us 3 actionable priorities for 2025. What would they be? Because you have plans to expand more into tier 2, tier 3. So tell us, you've got a lot of cash as always. The company is spewing cash. So what would be the 3 focus areas for you?
So one, of course, like I said, we will continue to ramp up our AI investment, and especially in the core Naukri business. And that will help the Naukri business grow faster over time. Second, we are working on our blue-collar job board. We started monetizing Job Hai, 2 quarters back. and we're getting decent results. So we will ramp up our investment in the blue collar job board, Job Hai, next year. And thirdly, 99 acres and Jeevan Sathi, we worked very hard on these two businesses. They are now almost breaking even, and we want to try and make them profitable next year, and of course keep growing them rapidly as well. So from an operating standpoint, these would be our priorities. Of course, the financial investment program will continue.
Very quickly, any big IPO encashing from you?
No. See, we've made over 100 investments. A lot of these companies are doing well. Some will definitely go public in the next 1 or 2 years.
Okay.
Which ones are close to going public or large enough size for you right now?
See, even Zomato and Policybazaar were tiny little 3 or 4 years ago, and we invested in them almost 16 years back. So it's very difficult to say how things will play out.
But which ones have achieved a decent scale? Because you have 100, so we can't track all 100.
Yeah, there are some which are looking really good and which will go public in the next 12 to 18 months.
Okay. Thanks a lot, Hitesh. We're trying to squeeze as much as we can. But have a great 2025. And if it is a good one, then we are going to see a lot of IPO investors getting rich, you included. Thank you very much for joining us.
Thank you.
Okay, that's the word coming in for InfoEdge. That looks like an optimistic conversation with hiring beginning to pick up.